Welcome back to the Did You Know channel. Today we're diving into a question that's on many people's minds. Why is former US President Donald Trump taking such an extreme step by reintroducing tariffs? And why now, at a time when the American economy is far from being in ideal condition? Is this just politics, or is there a well-calculated economic strategy behind it? At first glance, tariffs might seem like an outdated tool that does more harm than good. Their implementation immediately affects the wallets of not only the targeted countries, but also American consumers. While tariffs can protect certain industries and potentially bring manufacturing back to the US, the economic reality is that they are one of the most expensive ways to create jobs. That's why most economists consider tariffs an inefficient and risky strategy. Introducing tariffs could slow down the economy, increase inflation, and shake up the stock markets. And what about the long-term consequences? They are unpredictable, weakening the dollar, increasing uncertainty in global trade, and potentially undermining the US currency's status as the world's reserve currency. Even legendary investor Warren Buffett has criticized this move. According to him, tariffs are an act of economic war, and in the end, every consumer will feel the impact. Now comes the big question. Why would Trump do this now? Why impose tariffs on America's closest trading partners like Canada and Mexico? The answer might be simple: money. The US national debt has reached staggering levels. In 1924, it was just $395 billion. Today, it has surpassed $35 trillion. And with a debt-to-GDP ratio exceeding 120%, repaying this debt is becoming increasingly difficult. One of the biggest issues is short-term government bonds, T-bills, which have a maturity of no more than 52 weeks. Right now, the US faces the massive repayment of $7 trillion in the coming months. The government simply doesn't have this money, so it must refinance the debt. And this is where Trump's tariff strategy might come into play. Tariffs can create market uncertainty, cause stock prices to fall, and drive investors towards safe US government bonds. This would allow the government to refinance its debt under more favorable conditions. If markets start to collapse, investors will seek stability and shift their money into long-term US bonds, exactly what the government needs. So, could this be a carefully planned strategy to stabilize public finances? If so, it might work in the short term, but keeping tariffs in place for too long could seriously damage the economy and even push the US into a recession. The question now is this a well-thought-out plan or just a chaotic decision with no real long-term strategy? What do you think? Let me know in the comments. Do you believe this is a smart move or a dangerous economic experiment? If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you won't miss our next deep dive. See you next time.